Alright guys, so basically this is the only stock I'm interested in trading today. CGC, two interesting levels to play it from. Either a pinpoint from 640 or we can play it as a normal breakout below 622 or 624 approximately. This is the pre-market low. There are some shares exchanged at 620 even though not much, but this is considered to be the pre-market low. Anyway, I could play it below the 624 because it is still below yesterday's low, and not many shares anywhere transacted around here. It could act as support, but I doubt it would be a strong support anyway. The only issue right now is that we have 1, 2, 3, 3 5-minute candles. So at the open, if we break 624, I'm definitely not shorting it. What I need to see is a pullback, a new 5-minute high, and then once it comes back down, I'd be shorting it with that new high as a stop loss. Another potential play is once it goes to 640, not a limit, with a manual order. If I see that this level is holding or there are any confirmation candles, I'll be playing it to the short side somewhere up there. Now let's see what's going to happen. As you guys could see, this was basically my morning routine. It's not that long. I don't take much time trading during market hours. It's somewhere around 5 to 10 minutes, I think 15 minutes maximum, or somewhere around that. Then I just let my trades play out according to the plan. You could see that I played CGC to the short side. What you couldn't see in the recording is I added to it. Now let me explain to you why I added into this position. You could see on the daily chart that we have a reverse ABCD pattern. There is a range on the 60-minute chart, and there was a breakdown down here. So I played it to the short side with the stop loss somewhere around the high of the body, or maybe the middle of the range around here. I don't really remember where I moved my stop loss. Now, because I moved the stop loss, I could easily double my position. That's my average right now. Then I could double my position, and when I double my position, my new average becomes in the middle. The middle right now is break even, and I'm not risking 0 at my trades. I usually risk 1R on my trades. So I added even more than that, almost doubled it one more time, but not that much, somewhere around, I think I was 3 times bigger than the original position, just so that I can risk 1R per trade. And at this stage down here, I was up somewhere around 8 hours on my position, but my target was sitting at 604. Unfortunately, it didn't hit it. Then it started going up, making higher highs and higher lows. The 15-minute chart I also didn't like, higher highs and higher lows. You could see the waves, the trend changes around here, the trend's changing around here, and I was afraid that this thing could actually continue. Let me move on this back here. And I was afraid that this thing could actually continue squeezing up, and if it goes all the way up to 630, somewhere around here, or 630 or 631, I'd just be all out of my position, panicked, exit from my position. Not the smartest decision out there. Apple, I'm still short in. Played it to the short side. Now Apple, I didn't explain it in the video as well. Why did I play it to the short side? You could see on the daily chart that there is a range around here, and we're getting closer to yesterday's high, but overall we're weak, right? First of all, the stock gapped down, and it gapped down from the previous day close 163 to 159. That's $4, which is almost the ATR. After that, in the pre-market, it's squeezing all the way back up, and you could see from the pre-market low, which is 159.50, all the way to the high, which is 165. That is around $4.5, right? That is the full ATR. So first of all, the stock hits the whole ATR move to the upside against the original trend, when the original trend is to the downside. And at the high, it's starting to struggle. Tweezer top, which is a reversal candle to the downside. We're having the 200 moving average on the 15-minute chart as a resistance. We're having the 50 moving average on the 60-minute chart acting as a resistance. We're having the overall trend to the downside, so I played it to the short side. Partial down here just in case this was a fake breakdown because of these tweezer bottom down here. Not huge partial. I'm getting another partial right now, and the rest I'll be holding till the market close, or maybe if we break 161, I'll just decide what to do with that. That was it. I hope you enjoyed this video. Make sure to hit the like button, share and subscribe to our channel. If you have any questions, please type them down in the comment section. If you want to reach out to me directly, email me at aiman@beerbletraders.com. You can also follow me on Twitter. It's at aimanbbt if you want to see more similar trades. Have a great day, everyone, and bye-bye.